Okay, hello traders, welcome back on my YouTube channel. I think the video is a little bit clear today. Now, in today's video, I'm going to talk about what we call a trading plan. So if you're there and you like to become a profitable trader and you don't have a trading plan, you are in the wrong place. So watch this video till to the end. I think you will have learned a lot. Or what mistakes have you been doing for a long time? So before this video ends, you will have some a little bit upgraded on the things you have been doing wrong and you start doing them right. So now this is the FX Geometers signing in. Now if you're there and you haven't subscribed to my channel, please do subscribe now before you forget. So do subscribe to our channel because a lot of content is still coming. We'd like you to be the first person to be notified whenever we upload a new video like this. Now more so today, recommended Forex broker, we recommend you to use XNS to trade the Forex market. Why? They have the spreads. Secondly, instant deposits and instant withdrawals. For those who would like to know more about the instant, how to make a withdrawal, how to make a deposit, how to sign up with XNS, the link is down in the description to sign up with XNS. And if you haven't seen my last videos which I made on how to withdraw and deposit or how to install trading software for XNS and you start trading on your laptop, all the videos on this channel. So go type FX Devs on YouTube, go click on our videos, you will see all the videos of XNS and try to give them time and you watch them. So now my main point or our main topic today is a trading plan. A good trader is a trader that trades with a plan. So now, like we have told you before, trading is a business. You have to treat trading like these normal businesses which we give time. Now, why do we call it a business? Because we occur some losses sometimes, or some days, or some weeks, or some months, and also we occur profits, or we make profits some days, some months, some hours, some weeks, some years. Now, for you, if you have a physical business, for you to record on your profits and losses, all the days you haven't made any, you didn't make a loss, you didn't make a profit, but there were no customers, is by writing down. So now, same applies to a trader. If you're a trader and you'd like to become a profitable trader, you have to be with a trading plan. The truth is that you may study this ebook up until you will sing it, but if you do not have a plan, you will not grow in your trading business. Every trader needs a trading plan. Here are some of the reasons as to why you need a trading plan. So the reason as to why we made this video, even some traders don't know how a trading plan looks like. So now we would like you to use some of our procedures or the way we have analyzed this trading plan for you, then remove our points, use our titles or topics, try to make your own trading plan. Let me hope we're together. So now the first thing on our topic is your trading system. Now your trading system undergoes so many things, like the way I'm going to try to break them down. Your system stroke price action, of course, stick to it like your sponsor. Now I don't know, a lot of people would like to change strategies over and over and over. The reason is why you're using price action, you've traded with the price action for a long time, but you're not seeing results. That doesn't mean your strategy isn't working. But what you have to do like, as a trader is to find those mistakes which you are doing in your strategy. You will find that now I myself trade pure price action, whereby I mostly focus on chart patterns. So now you might find yourself that chart patterns they are violated by the market in the Asian session, but you find that in the London session, you can get setups being created and you enter in the New York session. So now you have to write this down. That my trading system in the London session, I look on the formation of patterns. In the New York session is when I get a perfect entry to enter my trade. So now you have to be trying to emphasize on these topics or these points I'm trying to give you or tips. Why? I would like you to go back to your drawing board and you say that in this strategy of mine, if I'm using moving averages, which are indicators, remember for those who use indicators, they enter after them giving being given an indication by those moving averages or indicators. So most likely you can say that before prices bounce on my oversold or overbought indicator, I'm going to buy, or I'm going to wait for the crossover, then I enter buy or sell. So now you have to write it down. You get it. So your strategy, stock price action, matters a lot when you are trading. Second thing is your favorite currency pairs. Now this comes with traders focusing on a lot of trading pairs. I myself in my first year, second year, we would trade over 30 currency pairs. Now you find someone is trading New Zealand dollar stroke JPY, Australian dollar stroke JPY, USD stroke JPY. Now these pairs they move the same. Any pair being quoted by the JPY or the Japanese yen, it is going to move the same movement. They will only differ on pips or the pip value, but they will move the same. If the JPY is gaining strength, they will buy. If the JPY is losing strength, they will sell. All these pairs which I've tried to note down, they will sell. So now try to go in JPY pairs, get one pair. Go in pound pairs, get one pair. Go in the US dollar, get one pair. Go in the euro, get one pair. Go in the Australian dollars, get one pair. So now I myself will trade only four pairs: JBP USD, Australian dollar stroke USD, Euro JPY, and gold. These are only four currency pairs I mainly focus on. But you'll find someone is trading over 30 pairs. So now, how are you going to differentiate about which pairs respect your analysis? But at the moment they trade less pairs and they know that this pair respects my analysis and this pair doesn't. I have it in my mind that for JBP USD, if I find a high confirmation in the higher time frame of a bullish engulfing candle, let me say it is a daily, I will just wake up and just buy. Even if the market first makes a little bit pullback, I know that it must buy. Why? I've seen it in the higher time frame on my major market key level. So bullish engulfing candle is one of the strongest candlestick patterns which the market respects ever. On 100%, it must respect it 99.9%. So now, let me head to my second point. Third point, the type of trader that you are. You must know in your trading system which type of trader are you. Are you swing trader, scalping trader, day trader, intraday trader, or you're a position trader? I myself am a day trader. If I focus on JBP USD, I know that pairs of JBP, which is the pound pairs, they have a lot of volatility in the London session. So now, what do? I analyze the market in the Asian session and I wait for a confirmation before the London session starts. So by the time we have that little bit volatility in the London session, I'm already in the market. So now, you'll find if the pair gives me 30 to 50 pips, I'm already out of the market. The highest pips I can take is 80 pips. I don't exceed from 80 pips. More so if the market, if we have a lot of volatility, unless me sitting with on my PC watching the market, you can find 100 pips, 120 pips and just close. But I target 30 to 50 and 80 pips. Now, you will find this pair can move within 3 hours and you find it's running 50 pips. So now you just close up your trades. So that means I found myself to be fitting in a day trader. Let me hope we are together. Another point, which is the last point on your trading system, pips or percentage your risk per trade. Now this goes back to risk management. For those who don't know what risk management is, we already uploaded a video on our YouTube channel. Go type FX tips and type risk management. You will find these videos and you try to get to know more about risk management. Now, pips or percentage your risk per trade. We told you that as a trader, you must not exceed 4% of your trading account, combining all the trades you have in your trading account. Let me read this. Do not exceed 4% of your entire trading account. So that means if you're going to place a trade, you will either place 2 trades and you risk 2% per trade, or you're going to place 4 trades risking only 1% of your capital on each trade. Let me hope we are together. So now you have to put that in consideration when we are trading. We try to risk 4% of our entire account. Why are we doing this? Is to protect our account from blowing up. Another thing, and the second point, is your trading routine. Now, your trading routine, we try to highlight some points when you will analyze the market and plan your trades. This is what I'm trying to explain. That for me, I find myself waking up in the Asian session and I try to analyze the market. So by the time we have that a little bit volatility in the market in the London session, I'm already in the market and I'm trying to scalp and see whether am I going to scalp or swing this trade. Yeah, so I wake up in the Asian session and focus on the market. When you actually watch the market take trades, this is the same time, like I've told you. So when you will evaluate your actions during your trading day. So like I've told you that my actions, I tend to wait for that confirmation and then before the London session or when the London session has just opened, and I see where am I going to click a buy, where am I going to click a sell, or if I don't have any confirmations, I can also wait for the New York session because we also have more volatility in the New York session than other sessions. Now the third point is your mindset. How you handle losses, learn to accept losses. You find most of the traders, I myself, you find if you have deposited your $100 account or your $100 on your account, you don't want to lose even a single coin. But remember, in my first point when I talked about treating trading as a daily business or as a physical business. Why? Some days we expect that we have to make losses, and we know that we have to make profits on other days. But as a trader, you will have to find a way have to maximize the losses and maximize the profits and minimize your losses. On the 10 trades you take, try to see that you have 6 winning trades and you only have 4 losing trades. Now, these 6 winning trades, they'll try to engulf these 4 trades you try to lose, and you find the overall target of the day or weekly, you have made profits. So now, find a way depending on your trading strategy to minimize your losses, which is risk to reward ratio. How do you handle setups? Learn to, should, do not overthink. Now, this is another problem to most of traders. You find you have a clear setup, but you fear to enter a trade. So now, at that period, you might fear to enter a trade and you haven't analyzed your fundamental calendar, and you find by the time you react to say let me click a sell or a buy, news can be released. Now after the news being released, you will find the setup just has spiked, but for you, you didn't react. So now you have a good setup. After having a good setup, but then you are again fearing to enter that setup, which is a way of not making money. Why? Because of fear. So now we have to overcome that fear. You have to feel confident on which trade are you going to take or which trade are you going to not take. So now, don't overthink when you're going to place a trade or buy or sell. Just when you see all the confirmations that you wait for you to enter a trade, just click a buy or sell. And try not to overtrade. Like we have told you before, that overtrading that doesn't make you a great trader. Overtrading doesn't mean that you're going to make a lot of money because you're going to be sitting on your laptop the whole day. No way. You have to find your lot sizes which you're going to use, find your target, how many pips do you want in the market. So that's why we recommend you to have a trading plan. If your target is making 80 pips a day, now if you get those 80 pips in 30 minutes, just close your laptop, go watch a movie, or go for a walk, or go and have fun. Why? You have already covered your daily pips. But you find someone, you have already made 100 pips, but you still need to make more money. In the process of making more money, you're going to lose some trades. In the process of losing some trades, you're going to overtrade to recover the trades which you have lost. Now, this is what they call overtrading. So now, sitting by your charts the whole day, it doesn't make you a good trader. It doesn't mean that you. Sometimes you will make a lot of profit, because all what I'm trying to say, I have already done it for several years. You will sit on your laptop the whole day, you can make money. You will sit in your laptop one day, one time, you lose the money the whole day. So now you have to pick one side. Either you make money and move out from your laptop, you move away from your laptop, or you stay on your laptop and you lose all the accounts. Try not to hate yourself after a loss, forgive yourself. This is the main point. After making a loss, try to get something to try to cool down your stress. You can go and hang out with your friends, or you can try to like get something to make you forget this loss. Why? If you build in yourself that this business, you have to acquire some losses sometimes, so it doesn't give you a lot of time to go through it. Try not to pay revenge on the market. Wait for a good trade setup. After a losing trade, do not try to leverage your account and you try to make that money back. So revenge trading is one of the things which make traders lose their accounts. Why? They would like to make their money which they have lost, to make it back in that same day, which leads to paying out their account. Number four is your weakness. List your entire problems here as a trader that you need to improve. E.g., I overtrade when I have just got a trade. So now, if you know your weakness that I overtrade after making a loss, please try your level best to overcome it. I myself have a problem of, like I've told you that I only focus on four currency pairs. You'll find yourself after making a loss in these currency pairs and you say, let me get another trade, which you don't have on your list, and you add that currency pair, and you also try to analyze that pair. After analyzing it and you place a trade, you also make another loss. So now, find a way of things which you tried to leave them and you focus moving forward. Don't go back to do those things. No. If you say that I'm trading four pairs, after making a loss, don't go and add another pair, which is a new pair which you haven't analyzed for over 6 months. You're going to lose money again. So now, I overtrade when I have just got a loss, so try to overcome it. I close trade according to profit, not to technical analysis and a regret later. So now this comes with the target. If you are to target 80 pips in the market and you find yourself closing on just 50 pips, you are the one who has the problem. Why? We recommend you to, if your trade has moved 20 pips from your entry, we recommend you to make what they call a break even. Get this stop loss of yours and knock some profits. If the trade moves from 20 pips to 40 pips, then lock the 20 pips. There you're good to go. If you're using lot size 120 pips, that is over $200. So now let the market do what it wants. Those consolidation, those spikes, those weak rejections, ABCD. Why? Because you will be tempted by these numbers and you close your trade and you see the trade moving all the way to your take profit. So you have to try to avoid that. I tend to chase the rules and forget my rules. So now you said you're going to focus on four pairs. The next day you have added another pair. So now you have to stick to your rules which you made by yourself and not changing them over and over. I have a problem with of risk management and risk to reward. Find a way how to fix it. Read books, watch YouTube videos, and find a way how to risk your account, which is risk to reward. Now, number five is your goals. A goal is to make money at least, but this is good at all in trading. A goal must be to stick on our rules to develop a good response to losing trades. So now we try to highlight all these points. I may not explain them more, but at least you'll get these major key points and you also make your own trading journey. And number six is your trading journey. Record why you buy or sell, record when you are closing, record what of state of mind were you when you are trading. So now all these points, these six bullets we have tried to spot out for you to help you when you are making a trading plan of yours. So now I'm sorry guys, talked a lot and this video is quite a little bit long but has valuable information, so watch this video till to the end. I think you will have acquired a lot of knowledge due to the our explanations. So now for those who haven't subscribed to our channel, I think this is the right thing we do. Hit that like button and also subscribe, plus signing up with our reliable forex broker which is XNS.